Hi students, and welcome to today's class. Now today, before we start going, I want you to look at this scenario. It says here, a group of principal account students had to prepare a report for the SBA project. One of the members, John, was given the responsibility of printing the completed project. Since none of the members had access to a printer, John decided to print the document at Secretarial Express over the weekend to submit on Monday. All the group members agreed to contribute to the cost. On Monday, John tells the members that they must contribute $10 each towards the printing costs. Questions? Well, me personally, I would want to know how or what was the full cost and if it was distributed evenly. Now, was to say John decided for himself he wasn't going to pay anything. Maybe he paid $2, maybe he paid $5. Now to get around that or to solve that problem brings us to today's topic, which is source documents. Now with source documents, or the question is, what is a source document? Definition is, a source document is a written record which provides information from which accounts can be prepared, or simpler, source documents provide evidence that a particular transaction took place. Some source documents we will be looking at today are, some source document contains the seller's name and address, the purchaser's name and address, purchase order number and date, date of delivery, description of goods and services, quantity and unit price, total amount due. Now, depending on the source document, it may contain all of these things, or it may contain some of them. So, depends on the source document, as I said. Now, some common source documents that we will be looking at today are cash receipt, invoices, credit notes, and a special mention to the debit note. Cash receipts. Now, with cash receipts this is a document given to a customer when goods are bought or purchased with cash. So all your cash transactions, or maybe a check transaction, is recorded in a cash receipt. Now, there are different formats of cash receipts, and the one I'm showing you today is just one format, as I said. Now, cash receipt here has an information for the receipt number, date, the receipt from, the amount due, for what purpose. If it's pertaining to an account, it can have a current balance, the payment amount, the balance due, and you would take if it's cash or check. Now, you can also have a cash receipt, like when you go to the shop and they give you a receipt for items bought. That is a form of a cash receipt. As I said, this was one format. Next up, we have invoices. Now it says here, an invoice is a document prepared by the seller when they sell goods or provide services on credit. Invoices usually are numbered for easy identification and filing in a suitable system. So we're going to look at invoices. Now there are two types of invoices we're going to look at. We're going to look at invoices sent and invoices received. First up will be invoices received. Invoices received, also called purchase invoices. Purchase invoices are sent by the supplier to the business when goods or services are bought on credit. A purchase invoice, as I said before, a purchase invoice is given to a customer when goods are bought on credit. This example, it contains the invoice number at the top, the date, the name of the business to the left-hand side, or it may be, this is just an example of an invoice, the address, to, from, product name, product description, the price, and the total. And they have a space for a signature or maybe a company stamp. The other way now is the invoice sent. Invoice sent are also called sales invoice. Sales invoices are sent to the customer by the business when goods or services are sold on credit. similar to the purchase invoice, because remember I said before, they're the same thing. It's just who's sending, who's receiving. So sales invoice are given when goods are sold on credit. Now, the next document we're going to look at will involve when goods are returned. And the reasons why goods are returned are, some of the reasons I should say, are as followed. One, goods were found to be damaged or faulty on receipt. The wrong goods were sent out by the supplier, or lastly, goods were received too late, so the sell by date has exceeded, meaning that even if you go to sell, they'll be expired. So you need to send back those things. Now, in order to record this information, we use what we call a credit note. Now, the credit note also comes in two forms. It's looked at in two ways. And the credit note can be viewed as a credit note sent and a credit note received. Now, the credit note received, this is a document used to record the amount to be deducted when goods are returned to the supplier. So this is the business sending back goods to the supplier. And it could be one of those following reasons that I listed 2 slides before. Now, the information on the credit note would be as the same way. We'll have on the description of the goods sent back, the reason for it, also your refund and the total. Next up would be the credit note sent. Now, if this is a document sent to the customer when goods are returned to the business. As I said, depends on which point of view you're sending that. It will either be a credit note sent or a credit note received. So you need to pay close attention, and that information will be the same in containing the credit note. Now, as I said before, there will be a special mention of a debit note. Now, the debit notes are not often encountered. This is something used to inform or request a deduction in the amount due. Debit notes may be issued to correct an on the charge. It says, please remember that in this situation, no entries are made in the business books of accounts until a credit note is received from the supplier. Now, you must also remember here that a debit note, precedes a credit note. So that one the business sends a debit note to the supplier, telling them that you want a refund for that particular purpose. You only record the information when you receive the credit note from the supplier. In other words, the credit note is the key document. So let's recap. It says, what is a source document? A source document is proof that a transaction occurs. What is an invoice used for? An invoice is used to record a credit transaction. What is another name for an invoice sent? A sales invoice. What is a credit note used for? A credit note is used for when a customer returns goods to the business, or you return goods to the business, to the supplier. What is a cash receipt? A cash receipt is used is given when goods are bought or sold for cash or by check. And what is a debit note? Lastly, a debit note precedes a credit note, where it is a request for a refund or to fix a situation for a request on the charge. Thank you very much for watching. This was a class on source documents.